Hello and good evening, everyone. Tim Davis coming to you guys with another video. I'm gonna call this one my breakout watch update because there were some sectors and some stocks, some things that I was telling folks to keep an eye on for a possible breakout. And pretty much it's going to be dealing with commodities as far as gold, silver, um, even copper, crude oil. Been watching those closely beginning part of this year for potential breakout moves because they've been creating a strong, solid base, strong, solid floor or support level for a potential major bounce and rally. And it looks like it is well underway. So we'll start out by taking a look at crude oil, something that I've been telling folks again to keep an eye on crude oil, keep an eye on gold, keep an eye on silver. Back on January 28th, I put out a video in reference to these commodities, gold, silver, and crude oil. And at that time, look here, back on January the 28th, right around, let me put up January 28th. See, we were right around here. So this is, let me see if I can pinpoint that a little bit better. So this is a daily chart. It's called a January 29th. So around January 20th, when I put out the video, it was right on the weekend. It's right on the weekend on a Sunday. And then January 29th was the very next day when actual crude oil came down from the area that it was at when I first posted this video. So I posted this video around here. Crude oil at that time was trading at about 78 bucks. And then opening on Monday, see, we had this big drop and then it continued down. But one thing crude oil had already did, it established a level of support down here. So doing this pullback, which lasted for probably about a week or so, crude oil finished right around this level, which was around 71 bucks. And then what happened? Look at this doji, almost doji type almost a doji type candle. From that point, it was a reversal, and crude has been off to the races since. So from around the 71 bucks, or even around from this 78 level, crude is now trading at right above 85 bucks. That's been a nice run since then, but I think crude oil has much more room to run. So keep that in mind. But you paid attention to me when I pointed out this particular area back here. You would have been able to, even if you were able to wait for that pullback and got in a little bit lower, could have found some nice cheap energy stocks that would have traded with crude, that would have enjoyed this much of an uptrending rally. And I still think there is more to come. I think we could see crude close to 90 before we see some type of decent size pullback just to a support level, not all the way back down to these levels. I think these levels are long gone. We could see, move up towards 90 and pull back towards 85 and then potential bounce. But I think we won't be seeing these 70s anytime soon. So crude oil, that's what it was around January 28th. It was right down here around 78 bucks. And I put out a video in reference to that area. At that particular time, excuse me, that particular time, gold was trading around January 28th. Let's see, gold was trading right around, let's see, so around that time frame, gold was trading right around here. Right around 2050. So gold was right around 2050, maybe even lower than that. So around 2050, let's say around 2050, 2040, between 2040 and 2050. That's what gold was at when I first put out this video in reference to keep an eye on gold as well as crude oil. So, and that was back in the end of March. I mean, I'm sorry, the end of January. The end of January, crude was right around 2040. So right around here, this is where crude oil was. I'm sorry, this is where gold was. And look where we at now. So you go from that time when I told folks to really pay close attention to a potential breakout, and it's a good time to probably put some coins to work in the gold sector. Gold was around 2037, and look where we're at now. Just broke above 2300. We could be seeing some type of pullback here now, but I think 2200 is probably going to be a level of support. 2300 is where we're at now. So a couple hundred points from this point to this point would have been a pretty substantial movement in some of the gold stocks. If you paid attention to the previous videos that I put out. So that was around March 28th. Now around that same time frame, silver was at March 28th. See what silver was around that time frame. And I think silver is the one that still has a lot more room to the upside. So right around March 28th, right around this level here. Let's just point that out. So that has silver right around 23 bucks, $23. Came down a little bit and then we went right back up. So from 23 up to where we at now, about 26. That's a nice move for silver, folks. So I made folks aware of the potential breakout, and we are actually in that breakout phase. So from 23 to 26 since January, end of January, was a pretty decent move overall. I put out another video right around on March the 14th to give an update. And at that point, we were definitely on the move. So at that point, silver was right around here, got as high as 25. So we were still on the move. And then silver came down a little bit and then on the move again. So following these trends, folks, and trying to jump in a trending stock or a trending sector is a good way to make some continued profit on the way up, especially if you're a longer term trader like myself. So that was a pretty decent move in silver since I initially put that alert out as far as the trend that looks like gold, silver, and crude oil was about to embark on. So right around March the 14th, take a look at where gold was trading at the same time frame. So at that point, March the 14th, you see, here we go. Gold right around here. This is around 2170. 2170. And from 2170, look where we're at now, we're right around 2300. So again, finding these sectors and stocks at these support levels is a good way to take advantage of a potential breakout if the longer term trend shows you that there's a potential breakout brewing. Now let's look at gold from March the 14th. Let's take a look at copper from March the 14th, which is another one that I started to. I'm sorry, that's not copper, folks. It's another one I said to keep an eye on because copper also is threatening a breakout. And it is even pulled back. So, but one thing I like about the way copper is moving like it's supposed to do in a wave. So we see around March the 14th, which is right around here. So March 14th, right around here. See, that started this move back in and started to move back in February. But March 14th is when it found a new level of support. And I said we would probably come up, come back down to around the support level. Look what it established, another area of support consolidation. And looks like it's starting to turn back up again. So copper, I think, is ready for a major break, a continuation of the breakout. That's something to pay close attention to. Around that time frame in March, crude oil had extended its rally. So around March 14th, crude oil extended its rally. It also made it up to a level of support, or should I say, level of resistance, and then we broke above that level of resistance. March the 14th, right around here, made it up to around 82, and I said be on the lookout for a move well above 82. And if we hit 85, that could be a sign that we could be on our way to a 82, a breaking above 83 will take us to 85, and then 85. From that point, we can see a move towards 90. So we see a consolidation back below this level, this breakout level here, and we broke out of that level. Where to now? We could see some consolidation here, maybe even some pullback before we get the next run up towards 90. But I do think 90 is in the cards between now and June as a possibility. All right. So that is just a look at gold, silver, copper as to when I first made you guys aware of the potential breakout. And it's been, and all have been moving nicely since then. Taking advantage of these moves, some positions that I was able to take a hold of at one point. GOLD was one. When I first looked at GLD, it was around 16 bucks. And that was right around March as well. So around March the 14th, and around here. So around 15, 16 bucks. Came down a little bit, and then look where it is now. 17 bucks. So that would have been a very, very nice move if you were able to take advantage of that. Congratulations to those who did. SLV was the ETF for silver. It's ETF for silver, and I've been in that position. I actually still hold that position. This is one that I actually got in around March the 1st. Around March, around March the 1st. So around March the 1st is when I actually picked up this longer term silver position. It does not expire until June. It is a call spread, and I'll continue to hold it because I just still think there's much more room to the upside. So right around here, right before we got this big burst, is when I jumped in this position right around here. So we went from around 21 bucks, and right now we are well above 23, trading right around, right close to 24 now on SLV. That particular position that I still have open for SLV is up now over 100%, and I still think there's much more room to the upside for that one. Another one that I highlighted, and this one I just took props on this position for, let's see. Yeah, took profits on this FCX for over 130% profit from when I took this position. This position I ended up taking around March the 15th. This is a very, very quick mover. And I do think FCX has some more room to the upside. There's a lot of call option activity in there for June, so I still think I'll get back in that position for the next leg up. So around March the 15th, just right at this break above this level of resistance. It's right around 43 bucks, and we're now trading above 48. That was a very, very good move for the call spread I had. I closed that out for a profit of over 130%. Trend trading, folks, like I say, is a very, very good thing if you can get in at or around some breakout levels. And here is the, let me show you guys this weekly chart. I've really been watching this FCX and gold. Matter of fact, let's go back to uh this copper breakout move first. That's not the one I'm looking for. The bigger picture of FCX. It may be on, hold on, I think maybe another chart. I drew a triangle pattern of FCX. It may have been something else. No, it wasn't FCX. I'm sorry, folks. But you get the point. Pull us back up again. So as you can see, this is the trend line that I drew. We broke above that trend, and FCX is definitely heading much higher. Another position that I was able to jump in was Oxy. So Oxy is Occidental Petroleum is a position that I was paying attention to. Actually, it's been over probably about, I say about 8 months ago, paying attention to for possible breakout because it has been consolidating. This is one that's been consolidating for quite a bit within this triangle pattern. Let me highlight this. This was a long move in the making. So we see back in February, around February 2022, how it just jumped higher for a couple months in a row, then it pulled back. Then it started to consolidate within a triangle pattern from all the way from 2022 to 2024, folks. See this pattern here? See this triangle pattern? See, these were the lows. It would not break down below the level, and it started creating lower highs, but not creating lower lows. That led me to believe that it was a consolidation going on. It took a while, but if a consolidation going on, then there was a threat of a breakout. As we got closer and closer, as the triangle got tighter and tighter, there was going to be a breakout or breakdown. And it looks like we broke out of that pattern, folks. We broke out of that triangle into a new trend higher. I was able to finally pull the trigger, jump into an FCX position. I'm sorry, an Oxy position. I would say that was on March 22nd of this year. Let me go back to a daily chart so it'll look a little more precise and cleaner. So March 22nd is when I decided to pull the trigger, open up some positions, some call spread positions in this one, right around here. We were trading at about 59, about 60 bucks, say 50, let's say 60 bucks. And look where we at now, 60, jumped to $68 on the day. And that particular position, my Oxy position is currently, take a look at my portfolio, it's currently up about 65%. And I still think there's much more room to the upside. So I'll continue to hold this one, doesn't expire until until June. Here's a monthly chart. This is what really has me salivating, is that this monthly chart shows this breakout is just beginning. I think we'll break out. Well, I think we'll probably go much higher than the $76 level sometime this year, and potentially come up to these highs, which is around 87 bucks. Monthly chart shows that the breakout is just beginning, and you still see RSI nowhere in the monthly chart, nowhere near in overbought territory. TTM squeeze hasn't really fired off yet on the monthly chart. So I do think that longer term, by the end of this year, we could see Oxy, folks, maybe around 80. So this is one I'm really going to be in and out of probably the rest of this year, taking profits along the way. So that's something to really, really pay close attention to. This is one that Warren Buffett had put in his portfolio last year, and I started to really look at this setup, overall trend setup, as far as from a technical standpoint. And I saw this consolidation pattern that was forming. And I said, okay, there's something really, really pay close attention to, and it's starting to work out right now. Again, that's the jumped into that one on March 15th with call spreads inspired to June, and I will continue to stay in that position. It is profitable now, but I think there's much more room to the upside. That's Oxy. So we took a look at Oxy, my Oxy positions, SLV position, CVE. CVE is another one that I was able to hop into on March the 13th. It's another one I think is still on the launching pad, but it's already starting to work. This is a daily chart. RSI reading right now is well above 90. So could there be some pullback here soon? Yes. So I do think it's a good opportunity to look for a pullback. I think any pullback is going to be a setup for a buying opportunity. So I originally got into CVE. That was on March the 13th. Right around here. Right around here, March the 13th, when CVE was, I'll say, it was trading just around 18 bucks, and now we're at well over 20. So that was a nice little move in CVE. Was able to so right now it's up about 85%. So this one I'll probably be closing out looking for another pullback for potential re-entry, CVE. And let's see, one more. Well, actually two more. One that I recently got, but one that I got about March 22nd, Newmont Mining, which is one that I've been watching for many years. Been waiting for a breakout in gold, and some of these mining stocks, folks, is a place to be once gold starts to break out. So Newmont Mining is one that I jumped in on. See, March 22nd. And I still think there's much more room to the upside. Let me get rid of some of these drawings here. All right. So here on March the 22nd, right here, we were trading right around 34 bucks, and that now we're just at 36, 30, about 38 bucks. And that position is currently still underway. I think we're just getting started here with Newmont. And right now I own 3750 calls, currently up about 70%. And I still think there's much more room to the upside on these gold stocks. Let's look at the daily chart. Take a look at the weekly chart on Newmont. As you can see, we still at the bottom of the barrel. We just getting started. Weekly chart shows we ain't even in overbought territory yet on the weekly chart. So I still think there's much more room to the upside for Newmont. So that's just a look, folks, at how these breakout moves are doing, and also look at some individual positions that I'm holding. Oh, one more that I just recently bought, which is I actually jumped into this position after seeing some unusual option activity. RIG, jumped into that one on today, April 2nd. Bought some calls in this one. 7 straight calls, not expiring until June. I do think we're going to see RIG between now and June well above this $8 level. That's my best guess. Looking at the weekly chart, again, we're not even in overbought territory on RSI. Look at a monthly chart here. Just starting to get off the ground. So in a few months, we can definitely see prices in RIG well over 8 as long as crude continue on this upward trajectory. And if we look at a daily chart, it's an overbought territory, but it could stay there. Anything is possible. It could stay there as we continue to trend higher. But getting into this position now, just riding the waves, I think it's a pretty good bet as prices continue to march higher. Let's see rig, and there was a lot of call option activity, unusual call option activity, with the 7 and 8 strike calls that expire in June. So I decided to add a few of those on today, April the 2nd. All right, folks. So that is my update on these breakout moves. Hopefully, this is some information that you guys can use. Again, the commodities, folks, is still on. They still breaking. They're still marching higher after they're broken out of some longer term levels of resistance. Finally starting to break out in a big way. Catch you guys in the next video.